everybody. Today we're going to be talking about the DSP Nifty Midcap 150 Quality 50 ETF NFO. And now to take this ahead with us, we have Mr. Anil Ghelani, Senior Vice President of DSP Mutual Fund. He heads passive products at DSP. Welcome to the show.
Thank you, Asta. I'm very keen and looking forward to this discussion today.
Thank you so much. So just starting with the first question here, could you help us provide the details of this fund, like the NFO period, the load structure, etc.?
Sure. Well, our NFO starts from 6th of December and it goes on till 17th December. So investors can allocate any amounts during this period. And post that, the NFO will reopen. So structurally being an ETF, what I mean by that is it will get listed on both the NSE and BSE. So at that point of time, again, investor can very easily and very seamlessly enter or exit. In terms of loads and all, Asta, zero loads. I mean, all ETFs are without any entry or exit load. So very easy to come in, go out into this particular strategy.
Got it. Okay. Just a very generic question here. What do you think is the importance of mid-cap allocation in an investor's portfolio?
Oh, very good question. Though you made it generic, but it's a crucial point. So friends, when we look at your investing journey, structurally, what we do, we are trying to identify certain life goals and then create financial plans to achieve those. Now, in that, typically speaking, depending on your age profile and risk and your duration of the goals, you will have some allocation maybe to equity, some to fixed income, commodity, etc. Now, within that equity allocation, it's very crucial to add some element of mid caps. It can be very beneficial to your overall equity allocation because mid caps often offer a much more better potential for a growth, especially in certain segments of the market, which are so-called future leaders or future sector, which could see good growth. So owning some component of mid caps in your portfolio offers a better growth potential into your overall portfolio allocation. But mind you, that always comes with a higher risk as well. So from my side, I always like to highlight that upfront, that in mid caps, you have a potential for higher return, but it will also come with a relatively higher risk or a downside as compared to large caps.
Got it. Okay. Well, now moving ahead, what are the benefits of investing in this DSP Nifty Midcap 150 Quality 50 ETF? As you just mentioned that there is slightly higher risk also, but at the same time, if there's somebody who's willing to take that higher risk, what are the benefits that the person is getting, especially in this NFO?
Sure. So if we look at now the broader context, what we spoke, that within your overall portfolio, from your equity component, some element is very useful to be invested into mid caps because they have higher growth potential. Now, within that, when we look at mid cap stocks, one of the crucial aspects is to focus on the quality. Like on the lighter side, when we are investing in mid caps, what are we trying to do? We are trying to, in some way, try and invest in tomorrow's big ideas today.
Right.
Or that there are always bound to be accidents or large number of ideas which might not actually scale up and become large cap or mega caps. So it's very important to be able to identify good quality stocks or good quality businesses and own them in your mid-cap universe. So what we are bringing with this new fund is that it will have the entire universe of mid-cap stocks, which is structurally the stock ranking 101 by market cap till 251. So this universe of 150 stocks, within that we'll have a good filter which will identify companies with good quality. And it will own only the stocks which are having good quality potential to grow into actually tomorrow's ideas. Now, just to take some numbers, if we look today at the overall mid-cap universe, means those 150 stocks, we can easily represent them through a particular index called Nifty Midcap 150 index, which includes all these 150 stocks. So if you look at the growth parameters, let's say the first number you see is the profit growth, net profit, right? So your profit growth of these companies has been about 4.8% over the last 5 years, compounded annualized CAGR growth. But within that, the mid-cap quality 50, if we look at only that universe of 50 best quality stocks, they have seen a growth of 9.8%, means 5% larger CAGR growth. Likewise, the top line sales growth, 8.9% overall mid-cap stocks, and mid-cap quality 50 only universe of, from that universe, 50 stocks with good quality companies has given top line sales growth of 10.4%. So higher growth plus good quality companies Currently, at a valuation, if you look at the P ratio of Nifty Midcap 150, the broader universe, it's about 31.6 times. And the P ratio of the Midcap Quality 50 also is at 31.5 times. So very similar valuation levels, but high growth and better quality companies are available through this portfolio.
Got it. Okay. Well, a couple of times you mentioned quality companies. So why is it important to select quality companies within the mid-cap universe?
Very good point. So when we look at the quality, this is the first and basic filter, especially when we are looking to allocate funds to mid-caps. See, Asta, there are many factors. One could look at momentum as a factor, volatility as a factor, value as a factor. Very important. People talk about growth, value. But I believe very strongly that specifically in the mid-caps, the first important thing to keep in mind is quality. If you haven't selected good quality stock or good quality company, then the other filters will fall apart. If you have a very high momentum stock, but if that company sees a very big accident or a blow up, then it's going to result into a very big drawdown in your portfolio. So now when we look at quality, what we are actually thinking, okay, very three basic things we look at in quality. The first and foremost is the return on equity. I have invested into business, धंधे में से return कितना मिल रहा है, right? ROE, what we look at.
Absolutely.
Second is the financial leverage, means to generate that ROE or to generate those returns, what kind of leverage or borrowings that business is doing. That indicates the strength of the balance sheet. And the third very basic thing is that those earnings which I am looking at, what are the growth prospects, or what is the quality of that earning? So if I see the earnings variability, that company is having a good stable earnings profile with relatively lower leverage and delivering good ROE, that's how a basic principle of defining a good quality company would be determined. So in actively managed portfolio, the fund manager or analyst will determine this based on their judgment. They will go and look at top-down industry trends, do a channel check, talk to the industry partners, then meet the company management and decide whether it's a good quality business or not. In passive side, or what we call as rule-based investing, we codify those subjective things which an analyst would think into certain predefined rules, which are evident and analyzed from the reported financials of that company, and create these kind of filters which will help in identifying these companies, then without applying human bias. So that's the key aspect of here.
Got it. Okay. Moving ahead to the next question now, what options do investors have today to expose to mid-cap, active or passive?
In my view, today, as we speak, the passive investing in India, like ETFs and index funds, has been growing very fast. Today, we are more than about 11% of the total assets under management of mutual fund, which is being managed in the passive strategies. However, I still believe that in mid and small cap space, passive investing is very nascent yet. It's to catch up now because there are large number of stocks to be identified. The mid cap universe is quite large, and very often we find mid caps are relatively under-researched and under-owned by institutional investors. So there can be potential for active fund manager applying robust investment framework to deliver outperformance. But what we are trying to do is position these kind of strategies which are a combination of both active and passive, like the best of both worlds, if I may say that way in a cliche dialogue, that will put those specific rules which an active manager would otherwise think of and create a good portfolio, a blend between active and passive, smart beta strategy for selecting good quality companies within the mid-cap range. So now investor has the option that, okay, let your allocation to mid-caps continue with some active funds, but start using these kind of smart beta or rule-based passive ETFs and index funds for a complementary allocation within your mid-cap. So let's take, for example, Asta, your portfolio has an overall equity from that you have taken 50% allocation to mid-caps. Maybe that's coming up to, let's say, 50 rupees. One can recommend that, okay, let's allocate 25 rupees from that to passive strategies and 25 rupees, let it remain active mid-cap. So as a complementary strategy, it helps in reducing your overall cost and at the same time retaining the so-called smart filters which are used to identify good quality companies. I repeat again, because in mid-caps, I feel very strongly quality as a filter is the crucial part.
Got it. Okay. Moving ahead, now what kind of investor is this particular scheme best suited for? And also, what is the investment horizon an investor should keep in mind before investing in this fund?
Whenever we look at investing equity as an asset class, structurally, we always recommend to look at it for a long term. And as we said in the very beginning, you had raised a very perfect question right at the start, that allocating to equity is aligned to some or the other of your life goal. Within that, within equity and mid caps, typically, I would suggest like a longer term horizon, like minimum 3-year, 5-year, 10-year type of a horizon. Let's say I have a horizon that after 10 years, I want to buy a bigger clinic. I'm a dentist, let's say, for example, and I have a small clinic which I'm using. But after 10 years, I want to move into much more larger facilities. For that, I need to build up, let's say, a corpus of, let's say, 1 crore rupees. It's a fairly long-term horizon. Within that, like we spoke, 50 is equity, 25 is now going to be my passively managed mid-cap rule-based strategy. So let it be invested for about maybe minimum 5 to 7 years, 10 years type of time horizon. And during these long durations, we observe historical data where we have seen rolling returns, not point-to-point return, because that one can say that as an investor, maybe I decided to invest today, let's say in your NFO, which was, let's say, 6th of December or 15th of December, I can't compare point-to-point. So let's look at rolling returns. So if we see the median number of rolling returns, not even like the best or the worst, median return over a 10-year period, this Nifty Midcap 150 Quality 50 Index has delivered CAGR return of 18.6% over a 10-year horizon. And if I compare that with, let's say, the Nifty Midcap 150, that is the overall universe of midcap stocks, the entire universe of 150 stocks, that has performed and delivered 13.9%. No doubt, 13.9, about 14% CAGR is a good number. But the quality filter, the unique positioning of this has delivered even better, like about 4% higher returns over that long-term average of 10 years CAGR. So it's in my view, historically, it has given very good performance as compared to the broader universe of mid-cap stocks. And I'll take 30 seconds more to define today's valuation of the market. Today, as we sit, let's say at the starting of December 2021, we have seen a very sharp and broad-based rally. That in this rally, with everything doing well, quality focus has not been so high. So all companies, even if they're not so good in terms of their quality, they have risen very well. So in this last 1 year, Nifty Midcap 150 Quality 50 has underperformed the broader universe of midcap by a large margin of about 15%. So let's say if I look at number end of last month, the Midcap 150 index is up 78% and Midcap 150 Quality 50 is up only 63%. But whenever in the past we have seen this kind of wide underperformance, the forward-looking outperformance has been very large. So we have seen that wherever there is an underperformance more than 10%, then in the 1 year forward and 3 year forward, 100% of the times, this particular quality focused portfolio has delivered an average alpha, not the best or the worst, but on an average, it has outperformed by about 13.4% in 1 year forward and 15.1% in 3 year forward earnings. So with that, I feel that currently, though market has been positive and rising, relatively, the quality focused portfolio in mid-cap space has relatively underperformed. That in fact offers a good opportunity to enter and allocate some funds into this strategy.
Got it. Okay. One final question, Anil, before we close. What is the total AUM that you're looking at for this fund?
Very good question. So I like to position it differently, that today we are offering a unique strategy for investors to allocate as a complementary strategy to your actively managed mid-cap funds. So today, if we see active funds in mid-cap space, there is a very clear-cut defined category of mid-caps. There are 25 actively managed mid-cap funds with a total size or total AUM of 1.5 lakh crores. Now, as I said, investors can gradually start using this strategy as a complementary allocation to that. So over a period of time, we believe that investors who are currently allocating and they have option only this 25 funds actively managed, and if they see that this can be a good complementary strategy, if they see historically this has performed better than the average of those actively managed mid-cap funds, then maybe they will gradually start allocating money to this strategy. So over a period of time, from that 1,50,000 crore, maybe some percentage allocation will start coming to this strategy and the size will gradually build up on that.
Got it. Understood. Well, thank you so much, Anil. It was such a pleasure to have you here. Thanks a lot for coming in, and we do wish you all the very best for your fund.
Thank you very much. And I would like to also take this as a quick moment to recognize the work that you guys are doing in enhancing the awareness of good investing to investors, not just through stocks and direct equity investing, but also through these kind of products like pooled allocation into ETFs or index funds or mutual funds. So great. And I wish you and your team all the best for your further growth at Upstox. Thank you very much for having me.
Thank you so much. Thanks a lot. Thank you.
Brokerage shall not exceed SEBI specified limit. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.